Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 6th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that all comes in to impact the markets with my market analysis. And I do the same thing for you folks in these daily market commentaries, but I'm going to go a little bit further and layer on some option strategies that I find based on those market assumptions we come up with. And it's not just picking an option strategy out of the hat. No, what we're doing is we've created guidelines. I created guidelines over the 25 years of my trading experience in order to find a streamlined process for you guys to implement the right strategy for any given assumption. So check out my daily market commentaries where I go into the details of those option strategies to find the right option strategy, okay? It's basically the roadmap to creating options, all right? So, on with the economic data. We've got across the pond, not a whole lot of information. We did see Lagarde speaking earlier today, and some Great Britain construction PMI coming in at 56.8, higher than the expected 54. So that's good to see there, obviously. And then over here in the United States, we got the TIP economic optimism coming in at 55. Expected to be, or it was 50 or 45 last month, so much better than expected on that front as well. JOLTS jobs openings pretty much in line with expectations at 6,490,000. It was expected to be 6.5 million, and they did revise last month's number up slightly. Powell speaking earlier today. On the economic front, like I said, we're getting all kinds of Fed governors speaking this week, so keep your eyes out for that. Also, tomorrow, the Fed minutes are going to be released. That's basically a little bit of hindsight, them talking about, or the release of the minutes of the meeting. So probably not a whole lot to see there, but you're going to see a lot of people do redlining in there and figuring out how one statement was a little bit different than the previous this last statement. All right. Also, volume's probably going to be a little bit lighter than normal as it is a Chinese holiday. All right, that's about it. I don't think I missed anything on that front. Harker speaking a little bit later on as well. All right. Ann Kaplan today. All right. So moving on to the overall markets, we've got crude oil continuing to churn higher here, up to $40.31, right back to the point of control and where the 200-day simple moving average is. All of these simple moving averages lining up right there at the point of control. Why? Because, well, we've spent so much time at those levels that all of the lines are starting to converge right there at around $39, $40 a barrel. That is going to become where the sweet spot is for crude oil. All right, gold futures giving a little bit back today as it could not get above that 1923 number that we were talking about. It is holding on to 1900, and this was, we were talking about seeing some stimulus, but you know, those stocks start falling apart and we start seeing weakness here in gold futures, and that's kind of showing up over there in the equities as well. Bonds, after yesterday's big sell-off, down almost basically 2 points and settling below the 200-day simple moving average. That is going to show some weakness going on there. Now, interest rates are starting to rise. How's that going to affect the housing markets and the rest of the economy right now as we're trying to struggle to get out of this slowdown that we've seen this year? And we're seeing a little bit of a bottom here, maybe more strength due to the fact that we're seeing some weakness in the equities. But I am inclined to keep my eye on this doji here, as I think it's just a little bit overdone to the downside, you guys. I just don't see them raising interest rates anytime soon. As a matter of fact, they're talking all the way out to 2023. So, you know, it's a couple of years away before we might actually see interest rates start to rise there. All right, VIX getting a bit of a push as we're seeing all the equities kind of jostling back and forth here. We do have the Dow Jones Industrial Average positive on the day by about 44. We did see the equities and the E-mini S&Ps positive, and where the NASDAQ was weak. NASDAQ's been trying to make a bit of a comeback. E-mini S&Ps coming off. As you can see, Dow Jones is actually coming off from its highs as well. Are we creating a pause here? Another thing to talk about is we are testing this area here. So anything above that line in the sand there would kind of break that lower high, lower low kind of thing, which is usually a pretty bearish signal there when you continuously have lower highs and lower lows. That is a step down effect there. Although we are very close to the point of control there in the Dow Jones Industrial Average. All right, NASDAQ off 5960 points here on the day. Off the lows, but still pretty bearish for the most part. Again, we're not really moving around a whole lot. I think we're going to see more consolidation here in the equities as we are nearing the election, and it's really going to be dependent on that as to how the markets really react, who's starting to lead the charge here for the presidential election. Biden talking more and more about his tax plan of anybody over $400,000 is going to have like a 40% tax bracket. So we'll have to see how the markets really are going to react to that going forward. E-mini S&P is barely holding on to positive territory, testing that value area high here on the charts. And again, just a bit more of a pause. It feels like we're going to kind of churn back and forth in and around this area. I don't think we're going to see some major moves anytime soon in the equities, at least this week anyway. All right, overnight inventory pretty flat, maybe got a little bit long. We flushed those guys out and starting to consolidate here in the E-mini S&Ps. Now I'm running through these charts because not a whole lot to see there on the major indices, but what I want to talk about are a couple of trades that I had that I was doing yesterday, and you guys remember with this one, it's the October. I had on the October sold the 1400 puts in there for originally $12.20. Now yesterday's big rally we were talking about, I had a working order in there. I got hit late in the day, probably around 3:30 Eastern time there. So very close to the close of the day, and I was able to buy those October 1400 puts back for $6.10. So right there at 50% of my max profit. As you can see, market moving down today. So glad I got out of those. Google trade worked out nicely. That Amazon trade is a bit of a pullback after doing very well yesterday. Down by about 50, almost 60 points on the day, but you can see yesterday had a nice big rally. I held on to it. I thought we were going to make a bit more of a pop again today with the tech sector as the stay-at-home trade, I think, should be doing a little bit better than it is today, but most of these major high flyers are showing some weakness today. All right, Kroger. I tried to get out of this. I actually went out and walked the dogs and was not able to get out of this trade where I wanted to. And I have on the January 35 calls in there, and I bought those originally for about $1.50 when it was trading, so 50% increase in that trade would get me out right around $2.25 or $2.20 is where I was trying to get out. That 25 cents is where I was trying to get out. I saw a trade 220, and then the market started coming back off. I started chasing it a little bit. I stopped at $2.20 on that trade. So I've got a working order to get out of my Kroger on the January 35 calls at $2.20. That's the offer I'm working right now. So if we can get a bit of a pop here, I might be able to get out of those, but otherwise this trade is starting to move a little bit south. Last I checked, it was trading around $1.95. So about a quarter away there, and I think I need to get it up there again to move higher by about 50 cents to be able to get those trades, because it is about a 50 delta. So if I get a 50-cent move to the upside, that delta would then increase my premiums by 25 cents, right? So that's how it works. So hopefully we can get a bit of a move here in Kroger, although I'm a little bit leery now that it's starting to sell off, but I'm going to hold on to that for a little bit longer there. Kind of play it out. All right, TLT is the trade where I'm kind of keeping an eye on this. You can see we had a bit of a sell-off yesterday. Finding a little bit of bottom right here around this 200-day simple moving average. I think it's overdone to the downside. So I'm going to be looking at doing something. I was looking at buying the 163 calls in there. So it's going to be a late day game time decision, maybe even tomorrow. But those are the strikes that I'm looking for TLT. I think we're due for a little bit of a bounce here. I don't think that the markets really should be selling off this much and having interest rates climb as fast as they are in this type of environment here. One other thing I wanted to talk about that I was looking at. Oh, yeah. So Starbucks. So interesting enough, now this is a nice little setup that you don't often see, almost a perfect example for the cup and handle. Like we've talked about these different chart setups over long durations, you know, the head and shoulders and stuff like that. Well, what we're seeing here is almost a perfect representation of the cup and handle in Starbucks. As you can see, let me do a drawing of a line here with the cup and handle. I'm going to try and hit this line. Oops. Right across the top there. Okay, so that's the top of it. And then if we take a look at the cup and the handle being, whoops, I don't want to do that. I wanted to go to this. So let me try and erase something. Let me just do this. Let's go back. Let's start all over here. The cup and handle. I want the line here. So bit of a top there, right? And then we go over to the handle and then the cup. All right, so that's kind of a cup and handle. What does that indicate? Well, it usually tells us that the market is getting ready to pop to the upside. If we can break above that that line in the sand, it kind of releases a lot of energy to the upside. So this is almost a perfect example of the cup and handle. Now we do have to break above that line in the sand, maybe above $90, and we should see maybe the shorts get caught on their heels. But I was just flipping through charts yesterday and noticing that we could come up there and test those tweezer tops. Now we also say on the floor, third time through. So this could be like the third time where we get through that setup, and then you get that little bit of a pop moving higher there for that cup and handle trade there. So perfect representation of the cup and handle here. We've got the cup and handle. So the handle right there and the cup is right there. All right, so a cup and handle setup. All right, that's about it for me today. Again, working to get out of the Kroger trade, 25 cents away, or if the market moves up by about 50 cents, I should be able to get out of that trade there. The other thing is covered my Google trade, keeping an eye on the rest of them. I haven't added anything today, just looking to get out. Oh, the last one was, yes, PENN. I am looking to get out of my PENN. And what I've done here with PENN is tried to lower my overall cost basis. I've been long this trade all the way down here since we were trading around $4.50. I got in at $4.49. The market has obviously continued to rally. Well, when we got up into these 70s, I decided this market has really outpaced the rest of the broader casinos. And I decided that I wanted to try and start lowering my overall cost basis. Maybe even have this called away from me. I wouldn't be hating on that, because I could then roll over to some of these other casinos that have been a bit of a lagger. This is a reopening trade. Yes, they do have Barstool Sports, and I think that they're doing very well with that. As a matter of fact, they're kind of making PENN a household name, whereas before most people didn't even know who PENN was. They knew about, you know, the Wynn, Las Vegas Sands, MGM, all of those big, huge behemoth casinos that have access to Macau, where PENN doesn't. It's more of a United States area and US and UK. But with that being said, I could roll that into some of these other casino stocks. So I decided to go in there and lower my overall cost basis. Yes, it's already really low, but I went in and sold the 85 calls in there in PENN. And I did this in my IRA as well. So I had done the October, sold the 85 calls in there for about $1.50. Let me just double check. Oh, $1.36 in there. So that lowers my overall cost basis from $4.49 to $3.14, right? Well, I'm not going to ride this out into the total sunset, but I am going to try and get out for 10 cents. Right, last I checked, it was trading around 25 as this market starts pulling back. So if I can cover that for about 10 cents, I'll be more than happy to just have lowered my overall cost basis. And on any type of bounce, I'm going to look to continue to lower my overall cost basis on this. Hopefully we can get PENN for free by lowering that basis over time there and get out of these relatively soon. And that's about it. That's all I've got going on in the markets right now, trying to cover a couple of trades that I put on. But other than that, keeping my eye on a couple of opportunities like Starbucks popping to the upside, TLT finding a bit of a bottom here. So we'll be talking about that possibly even tomorrow if I see some moves that create good opportunities in those chart setups. All right, that's it. That's all I got for you guys. One last thing to do is check out our disclaimer here, as we are an educational company. I'm not trying to solicit you guys to limbing off this cliff with me. I'm just trying to teach you guys how to trade options. All right, so if you can't take that, take it easy.